It's completely slipped from my mind. 2 students have put there live chatல sound not copying சொல்லி அதுவும் நான் பார்க்கல. See, if they have they are there live, that means they must be waiting, no? Okay, ஆச்சு, வேற என்ன பண்றேன், ஒண்ணுமே பண்ண முடியாது. Okay, all of you understood or not? 58,92,200. Understood? Next one. So, இப்போ finding out working note, now we have done working note number 1, isn't it? Now write down working note number 2. Working note number 2. Calculation of debt equity, debt to capital employed ratio. Calculation of debt to capital employed. Bracket எழுதுங்க, D by D plus E ratio to find out new KE, new PE and new KT. Correct தானே? இந்த மூணுமே மாறும். Suppose say D by D plus E goes beyond 35%. If it goes beyond 0.35, D at present எவ்வளோ இருக்குது பார்க்கலாமா? இப்போ at present D எவ்வளோ 1 crore at present, and E is 1 crore plus 2 crores. Correct? 1 crore is a debt, equity is 2 crores, 80 lakhs plus return earnings is 1.2 crores. அப்போ 1 by 3 எவ்வளோ 0.33 இப்போ இருக்குது. Suppose you go raise the loan, okay, debt, புது loan எடுத்தீங்க. அப்போ புது loan how much amount you will take? 40 lakhs. அப்போ 1.40 crores ஆயிடும் debt divided by 3.40. இப்போ பாருங்க, 1.40 divided by 3.4. Now it is going how much? 0.41. Cleanly it is going beyond 35. 0.41 means 41%. Correct or not? So all the 3 things will change. What are the 3 things will change? Here he has given, no. What will happen? KE will become 12.5. So thereby KE will become, in this scenario I am telling, and P ratio will become 8 and KD will become 14%. Suppose you go by equity, then it will come down, in fact, isn't it? 1 crore, debt will be 1 crore only, debt will be 1 crore only, this will be 3.4 crores. So how much it will be? 1 divided by 3.4. So 0.29, 29%, which is less than 35%. So there, now this will remain constant. KE, PE and KD will not change. Understood? Okay. இது வந்து working note எழுதிட்டு we will go for a break. Okay, write down. Working note number 2. Write down option 1. Option 1. Additional funds raised as a loan. Raised as a loan additional funds raised as a loan. Okay. So what will happen? New debt 1 crore plus 40 lakhs. 1 crore 40 lakhs. Correct? Equity same 2 crores. How 2 crores? 80 lakhs plus 1.20 crores. 80 lakh. Okay, 2 crores. Therefore, debt to CE ratio. He has told debt to equity ratio the tappu. Debt to equity ratio. Debt to capital employed ratio. Okay, that is debt by debt plus equity. How much? 1.40 crores by 1.40 plus 2 crores. 1.40 by 3.40. How much? 417. 417 how much va? 417 kapram? Sorry, okay. 41.7. Sorry, okay. Okay, 41.7 points. 4 117 sorry pa. Okay, 41.17. Okay, 41.17, no problem. So 41, since debt by debt plus equity 41.17 percentage, more than 35 percentage, more than 35 percentage. Okay, interest rate on new borrowing will be 8%, 14%, 14%, new KE 12.5 percentage, new PE 1 by 12.5% 8 times. 8 times. Option 2. Option 2. Additional funds raised by equity. This is very easy. Equity. Then therefore new debt by debt plus equity is equal to 1 crore by 1 crore plus 2.40 crores. 1 crore by 3.4 crores, 29.41%. Here, since debt by debt plus equity 29.41 percentage, which is less than 35 percentage. Okay, KE will be 10 percentage, PE ratio 10 only. PE ratio 10 only. Understood? No need to think about what is the KD, because in the loan edukliye verum equity dane. So we have done the analysis part, working note. Ipo verum under 2 options EPS கண்டுபிடிக்கணும். அவ்வளவுதான். அது வந்து break வந்ததுக்கு அப்புறம் ஒரு 10 நிமிஷம் it will take, or 7 to 10 minutes it will take EPS to find out. Then we will go for practical sums where financial break even point and indifference point I will teach you. Okay, We'll come back after break. 7 minutes, 5 to 7 minutes break. Thank you, Pa. And the students who are in live streaming YouTube, I am extremely sorry for my mistake. Literally, it was my mistake. Thank you, Pa. Thank you, my dear. The sound, okay, was not there. I did not see that. Okay, we'll go for a break. Okay. Now, write down calculation of okay, calculation of EPS under two different financing options. Under two different financing options. Okay. Now, first one, particulars option 1. Option 1 is what? What option? Debentures, new debentures, correct? New debentures. Option 2, new equity. New equity. Okay. In both the cases, EB80 we found out already. EB80, working note number 1. How much we found out EB80? 58 lakh 200. Very good. 58 lakh 92,200. 58 lakh 92,200 less interest. இப்போ interest வந்து old interest வந்து already existing okay on existing debentures at the rate of 12%, 12 lakhs minus on new debentures. New debentures how much? 40 lakhs ilya, and what is the at the rate of 14%, 5,60,000. இங்கே எதுவுமே இல்லை. அதான் எழுதுனேன் 12 lakhs. இதோ எழுதிட்டேனே. ஓகே, ஐ ஹவ் ரிட்டன்ரா. வாட்ரா, எங்கடா பார்க்குற நீ? டே ஸ்பெக்ஸ் எல்லாம் செக் பண்ணிக்கோ. கண்ணு தெரியல, என்ன பண்ணுறது? ரைட் டவுன் EBT. Subtract. நான் என்ன பண்ணுறது? You have specs issue means. So how much amount? 58 lakh 92,200 minus 17 lakh 60,000. So 41 lakh 32,200, and this one 46 lakh 92,200. Yes or no? Number of equity shares. சொல்லுங்க. Number of equity shares. How many number of equity shares? Here, this one, old one will count. That one I was testing you pa. தெரிஞ்சே நான் அந்த மிஸ்டேக் பண்ணேன். Okay. No, whether you people are alert or not, பார்க்கறதுக்கு நான் அந்த மிஸ்டேக். Okay. Tax at the rate of, இன்னைக்கு தூங்கல பையன். Okay. So tax at the rate of 50% தானே? Come on. 20 lakh 66,100. இது 23 lakhs 46,100. Okay. Then this one, earnings after tax, 20 lakhs 66,100, 23 lakhs 46,100. Number of equity shares. சொல்லுங்க. இங்க வந்து 8, இங்க வந்து 40 lakhs divided by 10. கரெக்டா? 12 lakhs தானே? கரெக்டா? No, this one, some, okay, we'll see. Wait, now here, இது தப்பு பண்ணிட்டோம் நம்ம. இது 12 lakhs கிடையாது. Because here you see additional funds raised by equity. இதெல்லாம் okay. Number of new shares. இது எழுதுங்க. Go back to the working note again. Number of new shares. Go back again, write down somewhere in the find out space. New shares to be issued. நம்மளுக்கு எவ்வளோ தேவை? 40 lakhs. And what will be the issue price of one share? Why would they issue at face value? What is the market price of the share? At this rate only they will issue. No, why would they issue at 10 rupees? If question is silent, then why would the company issue at face value? Of course they will issue. Market 25 rupees the company will issue at 10 rupees. Then the company will issue at what rate? 25, 15 rupees premium. Understood or not? 25. So how many shares? 1,60,000 shares. New shares. New shares. Okay, 1,60,000. So come back here. So here number 12 lakhs எழுதிருக்கோம். கட் பண்ணுங்க நீங்க. So how much it will be? 9,60,000. 9,60,000. Understood or not? Okay. So come back. Eight lakhs plus 1,60,000. Okay. Now EPS. EAT by number of equity shares. How much? 20,66,000 divided by 2.58. Inge 2.44. P ratio. இங்கே வந்து 8 ஆயிடும், இங்கே 10 தான். Okay, then understood or not? If this is 8, this is 10. We have already this. Okay, working note number 2. Then market price per share. EPS into PE ratio. சொல்லுங்க. 2.58 into 8. 20.64. This one 24.40. 24.40. Understood? Understood or not? 24.40. Okay. So how much was what is that market price per share before the new project? இப்போ புது ப்ராஜெக்ட் எடுத்தா it's coming down even further. So write down decision. Okay. So in the end options la, which is the best one? Decision. Equity option is the best. அவ்வளோதான். Okay, now practical sums போலாம். Question number 1, practical problems. Practical problems. Okay. let me read the question first, then I will explain the new concept through that sum. Okay. Here, INL Limited is considering a new project which requires capital investment of rupees 9 crores. Interest on term loan is 12% and corporate tax rate is 30%. Calculate the point of indifference for the project considering a debt equity ratio insisted by the financing agencies being 2:1. Or Pudu project they have got, and investment needed is how much? 9 crores. Now if they go for loan, 12% rate of interest, corporate tax rate 30. Calculate the point of indifference. You know what is, now I told you, two more concepts are there. One, financing break-even point, another one, indifference point. So we'll first learn indifference point. What is indifference point? If now, what is that level of EBIT where EPS is the same whether you go for the new finance through debt or equity? Think about it. You need for this project 9 crores. Okay. Now if you go for equity, then you need not to pay in interest. Straight from that 9 crores you subtract tax 2.7 crores, then 6.3 crores, assuming one share issue price is 10 rupees. So 90 lakhs is the new shares. So 6.3 crores divided by 90 lakhs, come on, do no, 6 crore 30 lakhs divided by 90 lakhs. Come on, 6 crore 30 lakhs, 7 rupees is the EPS. 7 rupees is the EPS. Understood? No. 9 crores is the capital. Sorry, my dear. Sorry. I'm sorry. So, now EBIT we do not know. From that you subtract, don't write anything, just keep listening. That is the 9 crores is the capital investment. Okay. Now EBIT, from that interest is how much? Nothing, 0. Then EBT, then tax, 30% you pay some amount, 0.3 EBT. Do not write anything, my dears. So 0.7 EBT divided by 90 lakhs equity shares. If you do, EPS will come. Yes or no? Some EPS will come. Here also the same EBIT, but here is telling that you raise that money by debt to equity ratio 2:1. That means 9 crores is the investment. Debt is how much? 9 crores into 2 by 3, 6 crores. Understand? And what is the rate of interest he has given? 12%. So 6 crores into 12%, 72 lakhs. So now EBT will be how much? EBIT minus 72 lakhs, some amount will come. From the tax you subtract, then earning after tax. And number of equity shares here will be 30 lakhs divided by 10. 3 crores divided by 10, 30 lakhs. Number of equity shares. There one EPS will come. Both EPS will be the same. That is called indifference point. So indifference point is that point where whether you take finance in this structure or that structure, EPS is going to be the same. Understood? Whether you take that additional loan, additional amount by issue of debentures or by issue of equity, EPS is not going to change. That is called, okay, indifference point in financial structure. Understood or not? Look at the question. He's asking, INA Limited considering new project which requires capital investment of 9 crores. Interest on term loan is 12% and corporate tax is 30%. Calculate the point of indifference for the project. Point of indifference means what? How your thinking pattern? Hey, nada, what is the difference? In the project, EB8 வருது. Then other your juniors are asking, sir, இப்போ 9 கோடி வேணும் இல்லையா, should we take அது லோன் எடுத்துக்கலாமா இல்லை ஈக்விட்டி ஷேர்ஸ் இஷ்யூ பண்ணலாமா? ஈக்விட்டி ஷேர்ஸ் வந்து ஃபுல்லாக இஷ்யூ பண்ண முடியாது, 2:1. லோன் எடுத்தால் ஃபுல்லாக எடுத்துக்கலாம். சாரி ஈக்விட்டி ஷேர்ஸ் இஷ்யூ பண்ணால் ஃபுல்லாகவே பண்ணலாம். சப்போஸ் லோன் எடுக்கணும்னா ஃபுல்லாகவே பண்ண முடியாது, 2:1 only. That means 6 crores லோன் எடுக்க முடியும் and 3 crores equity. Sir, which capital structure? Then the senior accountant is telling it really doesn't matter pa whether you go for this or that. EPS namalku avlo. Sir, adu eppadi sir? And the EB8 eppadi da pa? And the EB8 amount paatha na calculation panniten, EPS same varudhu. Now he is asking what is that EB8? Where whether you go to the project by taking completely equity finance or by taking equity and debt finance in the ratio of 1:2 or 2:1, sorry, 2:1. Understood or not? Now write down. You do the sum, you will understand it better. Write down. Capital investment financing, capital investment financing in two ways. One, issue only equity shares is equal to rupees 9 crores by 10, 90 lakhs shares. 90 lakhs shares. Here it is assumed issue price of one share is equal to rupees 10. Okay. 2, financing agency suggestion. What have they suggested? Okay, look at here. What have they suggested? Debt வந்து 2, equity வந்து 1. Debt 9 crore into 2/3, rupees 6 crores. What is the rate of interest they have told? 12% at the rate of 12% interest. Equity 9 crores into 1/3, rupees 3 crores, 30 lakh new shares. 30 lakh new shares. Write down. Write down. Point of indifference. One small note I'm dictating. Write down. Then point of indifference is that amount of EBIT is that amount of EBIT where the EPS is going to be the same amount EPS is going to be the same amount whether the financing is done by equity or debt. By equity or debt. Understood? Should I explain once more? Understood? Oh, write down. Point of indifference point of indifference of EBIT, okay, EBIT into equity la edavadhu what is that tax irka sorry interest irka illa 1 minus t by number of equity shares, in bracket write down n1 is equal to idu vande you can write down only equity finance. Equity finance. Here you write down EBIT minus interest into 1 minus t divided by number of equity shares, in bracket write down n2 equity and finance, equity and debt finance, equity and debt finance, equity and debt finance. Now write down, that implies EBIT namalukku theriyadu, what is that amount we do not know, into 1 minus tax rate, how much they have given, what is the tax rate they have given, 0.3 divided by number of equity shares under only equity finance. How many equity shares? We already wrote, no. How many equity shares? 90 lakhs, correct? Divided by 90 lakhs is equal to EBIT, here also same EBIT, in no minus interest will be how much, tell me my dears, what is the loan amount we have taken, 6 crores into 12% into 1 minus 0.3 divided by, now what is n2, how many shares we found out here, no, 30 lakhs, correct? Come on, 30 lakhs. What is this? Low battery. ஆன் பண்ண வேண்டியதானே, நான் பண்றப்ப இங்க தானே இதோ பண்ணிட்டேன், வந்துச்சு இப்போ அவர் தான், வேற என்ன இருக்கும், ஓகே. ஓய், அண்டர்ஸ்டுட் ஆர் நாட்? சால்வ் ஃபார் EBIT பார்க்கலாம், உங்கள் எல்ஜிப்ரா நாலேஜ் தெரிஞ்சிடும். கமா, சால்வ் ஃபார் EBIT. புக்கு பார்த்துட்டு எழுதக்கூடாது. You know how to solve this equation? over நீங்கள் ஒரு tell me one thing, நீங்கள் இது 0.7 EBIT இது 0.7 நீங்கள் மல்டிப்ளை பண்ணிட்டு எல்லாம் பண்ணீங்களா? அப்புறம் சிம்பிள் ஏன்பா இங்கே இன்ட்டு இங்கே இன்ட்டு இருக்கு இல்லையா, இதுக்குள்ளே இல்லைல்ல, அப்போ இது கேன்சல் பண்ணிக்கலாமே, எதுக்கு காம்ப்ளிகேட் பண்ணுறீங்க? மேக்ஸிமம் ஸ்டூடெண்ட்ஸ் டூ தட். ரெண்டு பக்கம் இருக்குது, அப்புறம் இந்த ஜீரோஸ் கேன்சல் பண்ணிக்கலாமே, அப்போது 3 1 ஜார் 3 3 ஜார் பண்ணிக்கலாமே. அப்போது at last EBIT by 3 into EBIT மைனஸ் அவ்வளோதான் இருக்குது. அப்போ EBIT is equal to 3 EBIT 1 minute also will not take minus 216 lakhs. அப்போ minus 2 EBIT is equal to minus 216 lakhs. Correcta? Minus minus cancel. What is that EBIT where indifference point is coming? 216 lakhs by 208 lakhs. அவ்வளோதான். Why all the this one? கொஞ்சம் ஐடியா பண்ணணும், அவ்வளோதான். சப்போஸ் இந்த 1 - 3 உள்ளே இருந்தால் அது கட் பண்ண முடியாது, ஆனால் வெளியே தானே இருக்குது, ரெண்டு பக்கம் கட் பண்ணிவிட்டு ஓகே யூ கோ ஃபார் இட். I wish all of us do question number 4. 2 and 3 easy sums you can easily do. Fourth one, mark it as very important point. 2 and 3 same அதே மாதிரி indifference point is asking. Okay, please write down as homework. Okay, and if you have any doubt, ask me. If you have any doubt, ask me. Okay, now fourth sum we will do, fourth one. Mark it as very important. Question number 4. Okay, look at here. Start பண்ணலாமா? Mark it as very important. Ganapati Limited is considering 3 financing plans. Okay, the key information is as follows. What are the 3 plans? அவங்களுக்கு total investment எவ்வளோ raise பண்ணணும்? 2 lakhs. The financing plans எப்படி தெரியுமா? வெறும் plan A வெறும் equity, only equity 2 lakhs rupees 100%. Plan B 1 lakh equity 1 lakh debt. Plan C 1 lakh equity 1 lakh preference shares. Remember, preference dividend is paid to the preference shareholders only after paying a tax. Preference dividend is not an allowable expenditure. Understand? Okay, now cost of debt வந்து 8% though இது இங்க. Okay, now here cost of preference shares, that is preference dividend, that means 50 lakhs 8 lakhs into sorry ba how much 1 lakh into 8% 8,000, and here also 1 lakh into 8% 8,000. Okay, tax rate 50%. Equity shares of the face value 10 each will be issued at a premium of 10 per share. Appo issue price how much? Tell me, issue price how much? Rupees 20. Expected EBIT 80,000. You are required to determine for each plan earning per share, the financial break-even point, indicate if any of the plans dominate, and compute the EBIT range among the different plans of indifference. Okay, this is indifference point is asking. This one we will do. Okay, now this one financial break-even point, new concept has come. Even before this we will do first this one, EPS you know. EPS you know, straight we will start working out. Now new concept I told you, no, there are 2 more concepts. Break-even point, what is that? Sorry, indifference point I have explained concept. Okay, again this sum again I will explain. Break-even point I have not explained yet, I will explain now. Let's find out first of all EPS under 3 different financing plans. Okay, write down. How much earnings they are going to make, new earnings? Has he told? Expected EBIT how much? 80,000. Okay, write down. Calculation point number 1. Calculation of EPS under 3 financing plans. Under 3 financing plans. Particulars: plan A, plan B, plan C. Plan A, plan B, plan C. Okay. Now write down number of shares issued. Number of shares issued. Now here, how much amount we need? Totally 2 lakhs. No. Yeah, equity shares of the 10 each issued at a premium of 10. So issue price 20. Now total amount of finance needed is 2 lakhs. So 2 lakhs by 20. இது actually நம்ம எப்பவுமே working note ல பண்றோம். இங்கே பண்ணிக்கலாம். Okay, how much? 10,000 shares. Plan B ல nothing, 0. No. Plan B 50% is 1 lakh. 50% is a debt, 50% equity. You remember? 1 lakh by 20. How much? 5,000 shares. Plan C வந்து 50% is equity, 50% is preference. Here also 1 lakh by 20. 5,000 shares. Does any student have any doubt? Yeah? Sure? Okay. Now write down EBIT. In all the cases, EBIT is not going to change. 80 rupees. EBIT rupees. 80,000, 80,000, 80,000. Minus interest. இங்கே எதுவுமே கிடையாது. First option nothing. Second option minus 8,000. அது எப்படி வந்தது? minus 8,000. இங்கே ஒரு ஸ்டார் மார்க் போட்டு இங்கே ஒரு ஸ்டார் மார்க். 1 lakh into 8%. 1 lakh into 8%. இங்கேயும் எதுவுமே கிடையாது. Understood? Now write down earnings before tax. 80,000, 72,000, 80,000. Okay, less tax at the rate of, what is the tax percentage he has given? 50% is correct. Look at the question. 50% is given or not? Where has he given tax percentage? Here. Okay, so minus 40,000, minus 36,000, minus 40,000. So will come earnings after tax. Earnings after tax. 40,000, 36,000, 40,000. எழுதிட்டீங்களா? Now write down number of equity shares. சொல்லுங்க. First இங்க வந்து 10,000, இங்க 5,000. EPS சொல்லுங்க. 40,000 divided by 10,000. Rupees 4. 36,000. பாத்தீங்களா? Okay. So, ஏடா கொஞ்சம் ஒரு நிமிஷம். Okay, 1 minute before you could have told, no? Less preference dividend. How much preference dividend? 1 lakh into 8% minus 8,000. This one earnings for equity 40,000, 36,000, 32,000. Number of equity shares 10,000, 5,000, 5,000. EPS 40,000 by 10,000, 36,000 by 5,000, 32,000 by 5,000. Rupees 4, rupees 7.20. Correct? Rupees 6.40. So which is EPS is more? Financing plan B. So this is the highest. Right? Okay. Highest. Okay. Understood or not? All of you. Concept understood? EPS concept. Okay. Now point number 2. Point number 2. Financing break-even point is that point where is that point of EBIT where EPS is equal to rupees 0. EPS சுத்தம் எதுமே வராது 0. புரியுதா? Okay, that means nothing. EPS வந்து 0. This one you have to remember. அப்போ financing அப்போ plan A ல how much it will be? EPS will be 0. நீங்க யோசிங்க. நீங்க think பண்ணுங்க. Plan A is what? Fully what? Fully equity தானே? அப்போ fully equity ல எந்த EBIT வரக்கூடாது. EBIT is 0 இருக்கணும். ஏன்னா EBIT வந்த உடனே நீங்க டாக்ஸ் கட்டுறது இன்ட்ரெஸ்ட் எதுவுமே கிடையாது. நோ இன்ட்ரெஸ்ட். ஸோ சம்திங் வில் பி அவைலபிள் ஃபார் ஈக்விட்டி ஹோல்டர்ஸ். ஸோ கண்டிப்பாக இபிஎஸ் வரும் இல்லையா? ஓகே. ஸோ 3 different plans இருக்கு. லுக் at here. Plan A, financing break-even point. Write down financing break-even point for Plan A. EPS 0, no. 0 is equal to EBIT into 1 minus T by number of equity shares are how many? Number of equity shares are 10,000. நீங்கள் சொல்லுங்க. இப்போ என்ன 0 தானே ஆகிடும் EBIT. ஓகே, இந்த 10,000 மேலே போனால் 0 is equal to EBIT. அவ்வளோதான். therefore EBIT வந்து 0 இருக்கணும். இது financing break-even point. Financing break-even point means what? Whatever you earn, okay, will go for fixed obligations of financing. What are the fixed obligations of financing? Interest, preference dividend. Tax அது obligation கிடையாது. Profit இருந்தால் தான் நீங்கள் உனக்கு கொடுக்க முடியும். அது obligation கிடையாது, compulsory கிடையாது. Profit இருந்தால் தான். What is the obligation or compulsory? Whether you have profit or not, அது கொடுத்தே ஆகணும் அந்த மாதிரி. So EBI that is financing interest cost and preference dividend. Okay va? This one. Then financing break-even point for Plan B. Plan B, debt finance. Okay, 0 is equal to EBIT minus interest. Okay, interest divided by now understood? Okay, into 1 minus tax divided by number of shares is equal to That implies 0 is equal to EBIT தான் நம்ம கண்டுபிடிக்கணும். Interest cost எவ்வளோ? 8 ஆமாம், இன்ட்ரெஸ்ட் வந்து 8000. எப்படி 8000 வந்தது? 1 lakh into 8%, okay, into 1 minus what? T, okay. T எவ்வளோ? 0.3 இல்லை 50? 50. 0.5 divided by number of equity shares are how many? 5000. 5000. அப்போ இது வந்து 0 into 5000 is equal to 0.5 EBIT minus 4000. Correcta? This 0 is equal to 0.5 EBIT minus 4000. That implies EBIT is equal to 4000 divided by 0.5 rupees 8000. So EBIT 8000 வந்தா EPS ஏனா EBIT 8000, interest you pay how much? 8000. அவ்வளவுதான் போச்சு. EBIT 0, tax 0, EAT 0, EPS 0. நீங்க பாருங்க, suppose EBIT 8000 இதான் வந்தது இல்லை, ஃபைனான்ஸ் இன்ட்ரெஸ்ட் இப்போ எவ்வளோ கட்டுவீங்க? 8000 கட்டிடுவீங்க. ஸோ இது வந்து என்ன? EBT 0, tax 0, EAT 0, EPS 0. அவ்வளோதான். Understood? That means that nothing should be available for equity shareholders. Earnings for equity shareholders should be 0. அதான் main point. Financing break-even point is that point of EBIT where earning per share is 0. Easy? Now plan C. Plan C. EPS is equal to EBIT minus interest. எனக்கு தெரிஞ்ச interest கிடையாது. minus 1 into 1 minus T minus preference dividend whole divided by number of shares. That implies 0 is equal to EBIT minus 0, 1 minus 0.5 minus 8000 divided by 5000. திருப்பி the 0 ஆயிடும். Okay, so 0.5 EBIT minus 8000. அப்போ EBIT is equal to 8000 divided by 0.5 rupees 16,000. Rupees 16,000. Understood? Now think about it. இங்க பாருங்க, எப்படி EPS வரும் ப்ரூஃப் பண்ணலாமா? EBIT 16,000 minus interest 0, 16,000. இது வந்து EBT less tax 8,000, 8,000 EAT less preference dividend 8,000. இது 0. இது வந்து earnings for equity. அப்போ EPS 0. Understood? அதான் financing break-even point. Understood? Should explain once more. Easy தானே? 10, 12, 8, definitely one sum. There is no doubt in this. Okay, this அடுத்த chapter cost of equity, அதுவும் ஈஸி தான். வெறும் மேத்ஸ் 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 மேத்ஸ், நம்பர்ஸ் 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 நம்பர். ப்ரொசீஜர் தெரிஞ்சாலே போதும். ப்ரொசீஜர்ஸ் ஃபார்முலா, ப்ரொசீஜர் ஃபார்முலா. இப்போ இது கான்செப்ட் என்ன? ஃபைனான்சிங் பிரேக்-even பாயிண்ட். இட் சவுண்ட்ஸ் வெரி பிக் திங். நத்திங் இஸ் தேர் வேர் EPS is 0. அவ்வளோதான். indifference point where EPS will be equal under two different plans. அவ்வளோதான். அந்த ஈக்குவேஷன் சால்வ் பண்ணாலே வந்துடும். under different financial plans, what is the EPS? டக்கு 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 3 columns பண்ணிட்டு EPS கொடுத்து வேண்டிதான். Understood? Same thing we have learnt for even this also. What is that? Leverage is also only formula. Then capital structure theory is also only formula. NI, NOI, then MM approach. All of that. Different KE, KO, then value of the firm. கொஞ்சம் practice பண்ணாலே அது அப்படியே you will be able to remember. Here also the same thing. And now I'm going to this one I have taught you now. அடுத்த point வந்து break இது indifference point பண்ணிட்டு then we'll go to MM approach திருப்பி பண்ணலாம். MM approach I want to do. We have time. இப்போ point number 3. Indicate if any plans dominate and compute the EBIT range among the plans for indifference. EBIT range among the plans. இப்போ indifference point means comparison will be done for two plans. No, he has given 3 plans. Indifference point means what? Whether you go for this plan or this plan, it really doesn't matter. EPS is going to be 0. சார் இங்கே வந்து 3 பிளான்ஸ் கொடுத்துருக்காங்க. அப்போது எப்படி தெரியுமா? பிளான் ஏ, பிளான் பி, பிளான் சி கொடுத்துருக்காங்க. ஸோ யூ ஹாவ் டு ஃபைண்ட் அவுட் த இன்டிஃபரன்ஸ் பிளான் பிட்வீன் ஏ அண்ட் பி. That level of EBIT where EPS is going to be same between A and B கொடுக்கணும். Plan A and C கொடுக்கணும். Indifference point. Then plan B and C you have to give. Understood? All permutation combinations, 3 indifference points you have to give. Definitely, invariably what will happen? One will be ill-defined. Ill-defined means indifference point varadu or combination la kandipa varadu. That's what I have observed. 3 கொடுத்துருக்காங்க இல்லையா, 2ல வரும், 1ல வராது, வரக்கூடாது. Okay, that is what we have found out. Okay, we will see. We'll one by one we will go about it. Sir, what do you mean by indifference point varadu? Means equation solve avadu. EBIT equation will not be solved. Equation we frame no. Okay, that cannot be solved. I will tell you. I will show you. Okay. Shall we go about it? Now write down. Now point number 3. Point number 3. Calculation of indifference point between plan A and plan B. Plan A and plan B. Tell me, my dears. Now you write down every time like this. EBIT minus interest. Now you may tell, sir, plan A no interest, no problem. Write down. No, basic formula is this only. No, into 1 minus t divided by n1 is equal to, again, plan B, EBIT minus interest into 1 minus t divided by n2. Plan B number of shares are, okay, this is A, this is B. This is A, this is B. Okay, now tell me, my dears, EBIT is what? Now we are going to find out. Minus interest. Interest amount is how much? Tell me, my dears. What is the amount of interest? Plan A, because completely equity, isn't it? So 0. 1 minus t, how much? 1 minus 0.5 divided by 10,000 is equal to, EBIT is what we are now minus, how much interest? 8,000. Yes or no? Minus 8,000. Okay, into 1 minus 0.5 divided by n2 is how much? 5,000. Correcta? Ipo irunga. This one you please strike it out. Now here also 3 zeros and 5 ones are 5 twos are. So EBIT by 2 is equal to EBIT minus 5000. Correct? Yes or no? So now EBIT is equal to 2 EBIT minus 10,000. Apo EBIT 8,000. Apo how much? 16,000. Okay. So EBIT is equal to how much? 16,000. So this is our what point? Indifference point. Where whether plan A or plan B you go, EPS will not change. Should I explain once more? Huh? Now plan B and plan C நீங்களே பண்ணிட்டு plan A plan C பண்ணிட்டு சொல்லுங்க. Plan A and plan C. Plan okay, plan A and plan C. Indifference point. Come on, do and tell me. Plan A and plan C. Come on, do and tell me. Found out? Hmm? All of you got a look at here. EBIT minus interest into 1 minus T by N1 EBIT minus interest. Now in plan C 1 minus T minus preference dividend we have. Understood or not? Divided by N3. Write down N3. EBIT how much is what we are going to find out. Interest plan 1 0 don't know 0 0.5 divided by N1 how much 10,000. Here EBIT minus 0 into 0.5. Mind you, here you cannot cut 0.5. Here you cannot cut 0.5. So be careful about preference dividend. How much? 8,000 preference dividend, 8,000 divided by N3, how much? 5,000. Mind you, here 0.5 you cannot cut. I told you no. Now here because one more number is there, that's why. So be careful about these kind of things. 5 ones are 5 twos are. Appo idu evlo? 0.5 EBIT divided by 2. 0.5 EBIT by 2 is equal to this one. If you solve 0.5 EBIT minus 8,000, correct? Appo 0.5 EBIT is equal to 2 into appo EBIT minus 16,000. Appo EBIT is equal to 16,000 by 0.5, 32,000. Okay, 32,000. Idu vandu break-even point. Sorry, indifference point. Indifference point. Oh, come on, all of you, understood or not? Huh? Now, look at here. Then plan what? B and C. Come on, do. Solve it. No, plan B and C. That is debt and preference shares. No equity. Now, equity is there, 5,000, 5,000. Now look at here, because equation cannot be solved, ill-defined, that is called as. Now plan B and C. Plan B what? EBIT minus 0. Interest is there, no? Plan B, how much interest? I'm directly writing minus 8,000 divided into 0.5 divided by 5,000. Plan C, EBIT minus 0 into 0.5 minus 8,000 divided by 5,000, correct? Now 5,000, 5,000 cancel. 0.5 EBIT minus 4,000 is equal to 0.5 EBIT. See how it is coming minus. Can it be ever possible? Here LHS is 0.5 EBIT minus 4,000, 0.5 EBIT minus 8,000. Is it possible? The above notation, write down. The above notation mathematically impossible is mathematically incorrect. So there is no indifference point between plan B and C. Between plan B and C. Understood? Now the point is, my dears, that's all, over, sum. Okay va? Ipo having done this, நம்மளுக்கு இன்னும் 5 minutes is there, 5-10 minutes. Illustration என்ன சொன்னீங்க? 9 you told, no? We'll do a illustration 9. Go there. அடுத்த class வந்து around half an hour I will take this chapter. Then we'll start cost of capital. Half an hour I will take. That is on Wednesday. Okay. What happened? Illustration 9. Okay. Now look at here. Following data is available. What did I say? That how approach without tax. I'm telling. Arbitrage process will happen. If whenever you find that two companies having the same operating performance, same level of operating performance, doing the same type of business and having the same operating performance. What do you mean by operating performance? Same. EBIT, same, and doing the same type of business. Okay. Then their overall value of the company will become the same. It will not change. Even if it changes due to some reason or the other, given some time, the both companies will settle down to same value because of arbitrage process on some inherent assumptions that the investors are well informed. Okay, they are logical, rational, mathematically calculative, the investors. And if that is the case, that is the inherent assumptions they have. Now if they bring a person like Shivaram into the picture, that's all, their theory will collapse. Shivaram is very lazy, not calculative. You understand? He doesn't care what is going on in his investments. அப்படியே போட்டுட்டு விட்டுடுவான். Suppose that they bring Shivaram into their calculations, no, அவ்வளோதான், entire their theory will collapse. They are telling, if you look at their assumptions, அவங்களது, that investors are rational, mathematical, the most immathematical calculations. When it comes to the teaching, okay, I will look like as if I'm a brilliant mathematician. Mari, I will talk, I will explain also. You people will think, sorry, okay, எதுமா பேசுறாங்க, இப்படி calculations எல்லாம் ரொம்ப சூப்பர்ப்பா. You come to my investments பாருங்க, no calculations, nothing. அதில் you literally, I'm not joking, I'm that kind of person, very, very lazy. There it is increasing amount so much, around 20 lakhs rupees I have invested in shares, mutual funds, then insurance policies linked with the market, around 20 lakhs rupees. எல்லா ஃப்ரெண்ட்ஸ் வித்துட்டு இருக்காங்க, நான் வந்து அப்படியே விட்டுருக்கேன். You understand that kind of lazy? No, it's not that only I am the person who is like me, many people are there. Now they won't, once they have invested, their idea is what investment பண்ணிட்டோம்னா அதுல இருந்து எடுக்க கூடாது, அப்படியே இருக்கட்டும் kind of attitude. You got the point? What am I trying to say? Once invested means அதுல இருந்து எடுக்க கூடாது, எடுத்தா அது மாதிரி இருக்கும் மைண்ட்ல. What is this? I'm playing with my own investment solite. So that kind of mindset. So for there, the entire these people theory will collapse. But that's what all of you understood or not. Now look at here. Following data is available in respect of two companies having same business risk. Capital employed how much? 2 lakhs. EBIT 30,000. Sources. Debt 1 lakh. Levered company and equity 1 lakh. K each 20%. Unlevered. Debt 0, 2 lakhs. Inge vande 12.5%. Okay, unlevered company. Now, if you carefully observe, an investor is holding 15% shares in unlevered company. Okay, calculate the increase in the annual earnings of the investor If he switches his holding from unlevered to the levered. See, no? Now the point is, my dear, why would he see? What did we do? Levered to unlevered he shifted. Here what is he telling? Why he is doing that? First of all, we have to find out. No. Why he is doing that? We have to. Now both the companies EBIT is how much? 30,000. Now how much interest will go away in levered company? 30,000 minus 1 lakh into 10% is how much? 3,000. Sorry, 30,000 minus 10,000. 20,000. 20,000, and this one is earnings for equity holders, correct? And 20,000 by KE. KE also how much? 20% is how much by the 20,000 by 20% panna 1 lakh, correct or not? And debt how much? 1 lakh. Upper total value of the company is how much? 2 lakhs. Understanding or not? Okay. So this is what the total value of the company levered. If unlevered, if you see 2 lakhs by 12.5% is pannunga, how much it is? What happened? 3 lakhs then? 2 lakhs divided by 30 lakhs varum paranga. 30 lakhs kadiyadu. 2 lakhs divided by what happened? Divided by 12.5% is pannunga. 16 lakhs. Sorry. Correct? EBIT எவ்வளோ பா? Sorry pa, 30,000 12 divided by 12.5%. How much amount? See, now here unlevered company value is more. Generally what happens, the argument how it gets developed, sir enna sir neenga eppadi solreenga, okay, unlevered company levered company value da eppovume jaasti more than unlevered. Okay, now you are telling that no, both the companies, but NI approach is telling as the leverage increases, value of the levered company will be more than unlevered. Appadi than argument vandadu. Here you see a situation where unlevered company value is more. ஏன் தெரியுமா? Some reason or the other இவங்க வந்து KE ரொம்ப கம்மி. Here KE is how much? 20%. Here KE is how much? Because of that reason, value of this unlevered company is more than the levered company. Understood? Now what MM is telling, even this also is not possible in the long run. We are never saying that unlevered company value will be more than levered or levered company value will be more than unlevered. அது நீங்க தான் சொல்றீங்க, நாங்க அது எதுமே ஒத்துக்க மாட்டோம். Okay, in the given certain time, and if the investors follow whatever instructions we are giving, these steps, now that arbitrage process follow panna, in the long run market la இந்த ரெண்டு companies value total equal ஆயிடும், மாறாது, சேமா இருக்கும். Understood or not? இப்போ now what procedure arbitrage process they gave for levered to unlevered jumping enna sonnanga? Now you sell the shares of your company. Adhe whatever percentage of shares you had in levered company and the percentage vechittu you also personal leverage create pannunga. And the rendu amount poite you buy the which company shares? Unlevered company. Ange vande you will get the income. Adile interest minus pannunga. Then see your income will be more than what company? Levered company. Adanal the other shareholders also will follow the suit, and in the long run both the company value will stabilize. This is what the theory has been given. Here also they are telling there is a procedure. Enna procedure theriyuma? One shareholder, now here is total value of the unlevered company is how much? 2,40,000. Say for example one person holding 10%. Now he will sell. He will sell. Understanding or not? So how much money he will get? 24,000. He'll get how much? 24,000. Simply he will take that money and he will invest 10% here, 10% here. Okay, 10% illa direct amma appadi balance. Now what will happen? Look at here, we will see. Okay, now 10% illana directly 24,000 investment பண்ணலாம், இல்லனா okay 10% இங்க பாருங்க, You start writing, no? Come on. 5 minutes only I will take, not more than that. Murchilla. You have raised a point, we have, okay, it becomes my duty to finish it off. Illustration 9. Illustration 9. Modalla. Step 1. Find out valuation of the firms. Calculation of value of firms. Particulars. Levered firm. Unlevered firm. Levered firm. Unlevered firm. Okay. EBIT 30,000, 30,000. Less interest 1 lakh into 10 percentage minus 10,000 inge vandu 0 20,000 30,000 no tax earnings for equity okay KE what is KE how much 20% 12 point value of equity okay value of equity 20,000 this here value of the firm itself 20,000 by 20% 30,000 by 12.5% understood so how much it is 1 lakh and here 2,40,000 plus value of debt 1 lakh here 0 2 lakhs 2,40,000 total value of the firm total value of the firm 2 lakhs 2,40,000 does any student have any doubt okay now how the switching process will happen that I will tell you now say for example now write down arbitrage process arbitrage process sell shares in okay now that fellow has he told one investor how much he is holding oh 15% no I took 10% okay sell shares of the investor 15% is okay bracket in a unlevered company 2,40,000 into 15% rupees 36,000 yes or no 36,000 now with that money he will go to the levered company correctly in that company he will look at the capital structure and that capital structure how much 2 lakhs rupees total value 1 lakh rupees debt 1 lakh rupees equity in that proportion only he will invest in that company also entire 36,000 entire amount okay write down invest total amount invest this is step 1 step 2 invest rupees 36,000 in levered company in equity and debt in the capital structure ratio capital structure ratio நான் எதுவுமே சொல்லலையே 36,000 அவங்கக்கிட்ட இருக்கு போயிட்டு அவங்க இன்வெஸ்ட்மெண்ட் பண்ணிடுவான் அதான் ப்ரொசீஜரு ஓகே ஆனால் ஃபுல்லாக ஷேர்ஸில் பண்ண மாட்டான் வாட் he will do ஆமாம் ஷேர்ஸ் அண்ட் டெட் போத் இன் வாட் ரேஷியோ அவங்களது எப்படி ரேஷியோ இருக்குது அந்த ரேஷியோவில் அவங்க ரேஷியோ என்ன இருக்குது 1:1 தோ அதான் எழுதுறேன் ஓகே ஈக்விட்டி அண்ட் டெட் இன் த கேபிட்டல் ஸ்ட்ரக்சர் ரேஷியோ தட் இஸ் 1:1 ஸோ therefore investment in equity 1 lakh into 50% no 36,000 into 50% is 18,000 correct then investment in debt 36,000 into 50% is 18,000 understood or not now continue working not sorry not continuous therefore percentage owner of equity is equal to and the company la 1 lakh is the total value of the equity 18,000 by 1 lakh into 100 18% owner ஆயிடுவான் இவனு இல்லை ஷேர்ஹோல்டர் ஆயிடுவான் இவன் 18% shareholder he will become இப்போ இவனோட இன்கம் பாருங்க அந்த கம்பெனியில் how much he was the shareholder 15% how much EBIT 30,000 30,000 15% how much 4,500 இங்க அதிகம் வரும் பாருங்க now 18% shareholder now write down income from இப்போ step 3 comparison of income the change in return other comparison of income or change in return step 3 income previously in unlevered company how much 30,000 into 15% as owner rupees 4,500 correct yes or no income now from levered company in bracket write down after arbitrage process after arbitrage process okay interest income 18,000 into what is the rate of interest that company is offering 10% so 18,000 to 10% how much 1,800 okay then dividend income from shares now think about it 30,000 is EBIT minus that company is paying interest how much 1 lakh into 10% correct no 10,000 bracket close into now he is the owner of how much percentage 18% is the owner of how much percentage 18% so 20,000 into 18% is how much 3,600 so here how much is making money 5,400 okay so write down here income from levered company see அங்கே வித்துட்டு இங்கே ஸ்விட்ச் பண்ணாலே எவ்வளோ இன்க்ரீஸ் ஆகுது 900 rupees increase ஆகுது therefore Therefore, increase in income due to arbitrage is equal to 5,400 minus 4,500 rupees. How much? 900 rupees. 900. Understood? அவ்வளோதான். Rupees 900. Tell me, my dears, all of you understood properly? Yeah? So that's all. So we will continue tomorrow. Half an hour more I said I will take, no? Okay, we will continue tomorrow, and after that we will go to cost of capital. ரொம்ப இன்ட்ரெஸ்டிங்காக இருக்கும், ஜாலியாக இருக்கும். சம்ஸ் டக்கு 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 மேத்ஸ் தான். ஓகே, டக்கு 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 பண்ணிட்டே போயிடலாம். Okay, formula, put the formula, get the answer. Put the formula, understand the logic of the formula, put the formula, get the answer. அப்படியே போயிட்டு போயிடலாம். Okay, அதே மாதிரி dividend policy also. Okay, thank you so much. We'll meet again next class. Thank you, pa.